Good morning, and thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let's take stock of what's happened around the markets. The news flow first, and and Dow rose for the seventh day, gained about 300 points after better than expected earnings. Vale beat production estimates in a fresh blow to iron ore market as per the Bloomberg headline. But more importantly, Rio Tinto's second quarter iron ore shipments declined 1%. So that market seems to be in a state of flux. In news reports talking about Foxconn signing off an investment pact, well, the companies rejected that report that they've not done anything thus far, is what they've said. India's reopened incentive plan for textiles for man-made fabrics. Let's see if that has some tailwinds to the ailing textile sector. It's not quite been up there. There are people who bought it as Piper Serica's Abhay Agarwal told us day before yesterday, I think. But there is clearly some support needed. No, as I said, Dow rose for the 7 day. Look at what the US markets did, and they did really well. About 1% higher for the Dow, S&P 500, the Nasdaq too, about 0.75%. And the reason why this happened in yesterday's session was that US banks, uh, everything which gave out with numbers. You remember 2 days ago, 3 days ago, JP Morgan in the US came out with a very solid set of numbers. I think Morgan Stanley, Charles Schwab, a bunch of other financial institutions in the US have delivered very strong numbers. So that's part one of the play. And AI linked stocks, Nvidia and the others did really well, which is why you had a simultaneous rally in both the Dow and the Nasdaq. So good going rate there for the US markets. The other cues were okay, no big changes out there. I think, as you can see, flattish between the yield went up a little bit maybe, but still between 3.8 and 3.7 and 3.9. So no big changes there. And the gift Nifty, at least let's get the indication of what the gift Nifty could be doing. Flattish, 19,802. We about 250 or points away from all-time highs. And if viewers, um, Reliance sees some cash market buying today, then we could be in for an interesting piece. Now, keep in mind, I mean, let's bring the trade setup. I'll explain about Reliance as well. But firstly, most people say this, that market may be in an overbought zone, but the undertone is still very, very constructive. Yesterday, for example, the market breadth wobbled in trade. And therefore, what I believe could happen is that in cases where the expectations are that the results might be good or there are tailwinds or the fundamentally strong companies, sure, you can't time the market, so don't play around with that. But if you have trading positions in little known stocks, then it might be worthwhile to kind of take some chips off the table. uh, you know, in those names, party yes, but dance close to the door. In the case of some of the others, almost everybody says that we are not at the fag end of the cycle. We're still at the start or the middle of this upcycle, and therefore don't get too unduly worried with even if a corrective move of 3-5% comes in. Earnings estimates on capex incentive beneficiaries are looking very, very strong on an FY25 perspective. Now, I've seen um, multiple people talk about the kind of growth that these companies are expected to do, and therefore some of these capex beneficiaries, they may look expensive FY24 basis, but they look very reasonable FY25 basis as well. The growth will likely take care of it. Keep in mind, the rise in the dollar index, slide in the yield is all supporting liquidity in emerging markets, and therefore the good companies will most probably continue to get flows. By the way, speaking of flows, foreign investors bought about 2,100 crores yet again. DI sold about 1317 crores. But if yesterday was a flash in the pan wherein the number was very small, or Friday, it was short-lived. The numbers are looking very strong even now. Nearly 34,000 crores done in July thus far. We're looking at a number which will probably beat May and June quite handsomely. Now, one small development that has happened that people need to take care of, that the ESM category circuit limit of 2% for once a week has now been revised to 2% a day on all trading days. So stocks under that classified and not ASM, ESM, had a limit of 2% up move in a week on a one particular day of a week, and then the trading would stop. Now it's been revised to 2% a day for all trading days, and therefore some of those stocks, maybe they were good stocks as well, but trading patterns might have been looking awry and they might have been put in the category. So those stocks no longer have that restriction of just 2% movement a week. So that's the small update from SEBI's end that came in yesterday. A lot of updates from the exchanges will come on results, not index names today. The index names are largely tomorrow, but a lot of names out there in today's session as well. So look at Tatacom, LT Finance Holdings, Hudson Agro, Century Textiles would be interesting, Mastec, Jubilant Pharma, Nova, and Tata Coffee. More importantly, Premier Explosives as well, right? That stock has gained nearly 100% in the last so many days, and therefore yesterday there was a sharp downtick too. Let's see if the results live up to the kind of move that the stock has done. My colleague Hiral had a conversation with the management as well. We are going to tune in to see what the company expects it will do. I think they did some conversation about 2 or 3 days back. So watch out for some of these result deliveries today. Now, stocks to watch in the session today on results or news flow, right? So first is IndusInd Bank. The numbers came out just post market hours yesterday. Jeffrey's note sums it up, so I've just used that note. They have a buy, and the target price has been, I don't know why that line isn't there, but here's the key line for Jeffrey's, that they have a buy and the target price has been raised to 1750 from 1550. So it's a 200 rupee uptick on the target price from Jeffrey's end for IndusInd Bank. Now, why? NI growth of 18%, led by 15% rise in, which led to a 15% rise in PPOP. The asset quality was stable, and the management has confirmed the credit cost guidance of 1.1 to 1.3%. Now, Jefferies sees scope for a 20% CAGR in loans and tailwinds to NIMs from peaking cost of funds. So that is part one. Well, if RBI stays stable and will not hike, then the cost of funds have peaked, which is maybe a positive. They see a 21% profit CAGR over FY23 to 26 with ROE of 17%. By the way, ROE of 17% is right up there. I mean, I think SBI is 15 or 16, HDFC Bank must be 17 or 18. If I'm not wrong, please excuse me if I am, but I don't think I am. So on strong ROE, strong profit growth. Last week we were talking about how Monday we were talking about how the banks thus far had disappointed, but um, if the big banks start to show performance, then it could help the bank Nifty. I think we've seen signs of that. HDFC Bank doing that. IndusInd Bank has done that, and which is why Jefferies has raised the target price as well. I would suspect that IndusInd Bank could have a good start in the trading day today. I'm not sure about LTTS. It's a bit of a mixed bag here, viewers, and I'll take some time to explain why. So first, the results. Revenues down 2.1% quarter on quarter at 2301, almost in line with estimates though. Marginal miss, if you will. EBIT, Bloomberg estimates that is. EBIT 394 crores, the estimates was 394. EBIT margin 17.14, the estimate was 16.9. So in fact, on that they've beaten, and net profit 311 versus 309. So again, in line with estimates. But for some brokers, the numbers were slightly lower than estimate as well. The thing is, while it may have on organic growth have missed uh, the guidance that it had given LTTS, they have maintained the FY24 constant currency revenue growth guidance of 20%, which is organic plus inorganic, and organic is 10%, is what they have said. And they have won a high-tech deal worth $50 million for digital media platforms with a global technology company for a 5-year tenure. That's a large deal win that comes in for LTTS, and that should be construed positively as well. Now, viewers would remember that when HCL Tech came out with numbers and they missed quarter one numbers, but they guided to strong quarter two, quarter three, quarter four, the stock saw a big bump up. The reason why it is not so easy to predict in LTTS's case is because the valuations are not as cheap as HCL Tech. And Morgan Stanley note kind of sums that up well. So they went underweight with a target price of 3,200. Morgan Stanley says Q1's revenue miss was sharp on organic basis. As I said, some brokerages believed it was the organic revenue growth was a sharp miss, but the management provided balanced commentary and maintained its revenue guidance, 10% plus organic growth in FY24. They believe revenue guidance could be at risk given high ask rate, and the margin performance was resilient. So, like I said, it's a bit of a pickle to figure out how would LTTS react. So I would suspect that if you're not an expert in figuring out what LTTS price movements can be, try and not trade this one. Adani Transmission Q1 update. They maintained system availability of 99.8% in Q1. They added 550 kilometers to the operational network during the quarter. The total network stood at 19,778 kilometers, and they received an LOA for 3 smart metering projects in Andhra Pradesh. So I think that Q1 for Adani Transmission at least seems to be a rock solid one. Standard disclaimer, of course, the Adani Group owns 49% stake in Quinton Business Media, which is the owner of BQ Prime, on which you are watching this trade setup. Then the network 18 twins. TV18 broadcast the numbers, 152% jump in revenues, which was very strong, but the margins came off 13.14 versus 18.09, and the net profit was up 51%. So you can see the change in the growth rates of the revenue versus the net profit. Strong revenue growth. Just keep in mind this is an IPL quarter, and therefore this uptick of revenue may not necessarily last in the quarters ahead. So don't think that, oh, if your company's grown 151% in Q1, it'll probably do the same every quarter. In fact, the next quarter will also have the base effect of the IPL. But is it a bad number? No. I mean, it's a strong revenue growth number and testimony to the growth in digital businesses that Network 18 TV18 Group is doing. But I think the margin hit and the fact that this is a one-off, or rather not a one-off, but a one-quarter phenomenon, might be a bit of a disappointment. Let's wait and watch. Again, difficult to quite say what happens in these stocks. For Network 18, which is the parent of TV18, again, total revenue jumped nearly 150% as well, but there was an EBITDA loss and there was a net profit decline as well. So, for both Network 18 and TV18, kind of difficult to say what will happen to the stocks. Himadri Chemicals, I would suspect, could actually do well. A bit more predictable, despite the fact that the revenues were down 9%, because they shored up their margins really well. 14% versus 6.84%. Net profit jumped 123%. I think the markets would reward this. Let's wait and watch. CI Automotive, overall the performance was stable, but there was a marginal miss on estimates. Revenues 4.7% higher at 2320 crores. Margins did really well, nearly 200 or slightly over 200 basis points expansion of margins, and thereby a net profit growth of 59.74%. So good going there. By the way, speaking of numbers, and I haven't given those numbers, but Porinjuvelia's name recently came in a stock called Aurum PropTech. The stock had seen a sharp uptick. The numbers came out, revenue growth numbers were okay, but the other performance was shabby. So just be careful. Try and understand the company yourself, because a famed investor's time horizon might be completely different than yours. And therefore, his estimates of what the stock will do over a period of time may not match with your estimates of what a stock should do in your time frame. So again, Aurum is a case in point wherein Q1 numbers haven't been great. There has been frenzied buying and updates in Orchid Pharma, wherein people say that different names like Old Bridge or Carnelian or Quant have gone in. The stock has already rallied from 450 to 580. So please be careful when you're buying. I'm not saying these stocks shouldn't be bought. All I'm saying is the time horizons, you should study these businesses and you should buy them based on the time horizon that suits you, because these stocks will not necessarily move in the time horizons that you want them to move. So please study them very, very well. They are differentiated business models, and therefore you need to be mindful of that. Now, Hero MotoCorp is the other one in news today. Sources with the sources, people with knowledge of the matter have told Bloomberg this, that India's Corporate Affairs Ministry has summoned the board of directors of Hero MotoCorp for questioning in an investigation pertaining to alleged diversion of funds. Notices were sent to the board of directors to appear for questioning between July 14 to 21st. Maybe it has an impact on Hero. Maybe this announcement will have an impact on Ramkrishna Forgings, that they have commenced the commercial production at the Kharswan unit from today. This will enhance the production capacity by 23,800 tons per annum. The total production capacity now stands at 210,000 tons per annum. So presumably from Q2, RK Forgings will have a higher growth number because of that added capacity. Maybe that helps the stock as well. Vedanta's Semiconductors and Display Global MD Akarsh Heber has said that substantial progress has happened to tie up technology and equity partners in semiconductors, and they'll make an announcement soon. Let's see if this helps the stock. IOC, ADNOC Gas, has entered into a deal with Indian Oil for an export of 1.2 million metric tons per annum of liquefied natural gas. The deal is valued at $7 to $9 billion over 14 years. Watch out for this one. And some bulk deals include Arama Steel, wherein SocGen has bought about 6 million shares in a bulk deal, and Eris Life Sciences, wherein HDFC Mutual Fund has bought 8 lakh shares at 728.49. Eris recently saw some buying from other funds as well, so do watch out for these ones. There's a viewer query: should we book profit in Polycab? I'm not quite sure, Anand, but the brokerage notes that have come out today and that I have read are all speaking that the quarter one performance was ahead of estimates. It's a market leader, presumably doing well. Uh, and the sector, real estate ancillaries or infra ancillaries, are in a bit of a sweet spot. So is it an expensive stock? Yes, but stocks have stayed expensive for a while. So I'm not sure. Sorry, I can't make comments on a stock buy or a sell. Unfortunately, I can get you what analysts are saying, and the brokerage notes today seem to be constructive. I hope that helps. A lot of very important conversations lined up today on BQ Prime. I thought I should bring them to you. So talking point, I love talking to Sridhar Sivram because he's got a great macro and a micro mind put together. He joins in our studios today from Enam Holdings. So watch out for that conversation. Alpha Moguls at 10:30. Prashant Khemka, founder of White Oak Capital Management, will be talking to us. Tons of experience, a large house. So that is important. We'll hear from Amit Chadda of LTTS at 9:45 a.m. today. So that's a conversation you don't want to miss. We'll hear from Pranjul Bhandari, Chief India and Indonesia Economist at HSBC. She talks about in India's growth report. So HSBC India's growth report. So that's a very important conversation. I want to tune in. And the MF show later on with Himanshu Kohli, co-founder of Client Associates, as well as Shalini Sekhri, CEO of Infinity Asset Advisors. You might want to tune in for this conversation as well. We'll talk about some of the key aspects around mutual funds. More specifically, if you want to make a portfolio of mutual funds for the next 10 years, betting on the India growth story, what should you do? We'll try and talk about that. Thanks so much for tuning into the trade setup. There is some query about pharma sector as well. My limited point is, sorry, I don't know. I can't comment on whether you should buy or sell, Srinivas. But if you look around, almost everybody believes and everybody says this, that a pharma sector is select pharma, select healthcare pockets are trading at good valuations, and there is an uptick ahead. If this helps, Srinivas, we'll be talking to Sridhar Sivaram about the pharma sector. You might want to tune in and try and hear to what an expert really has to say about that pocket. I will be quizzing him on pharma for sure. I hope you tune in for that. Thanks so much, viewers, for tuning into the Trade Setup.